Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Greetings, fellow investors, and welcome to the College Investor Audio Show. So today we're talking about what are small cap stocks and how do you invest in them? Well, some small cap stocks have the potential to take off and become the next big thing. Investing in small caps, though, wow, that can be a wild ride. Hang on. They tend to be more volatile than larger companies. So what are small caps and how do you invest in them anyway? Well, let's find out. So let's first define small cap stocks. So the cap in small cap refers to market capitalization, which represents the size of the company. Market capitalizations can be calculated by multiplying the shares outstanding by the current stock price. So, for example, a company with 100 million shares outstanding and a stock price of $5 has a capitalization of $500 million. Companies with market caps between $300 million and $2 billion are considered small caps. Although this range is not set in stone, as different people may use different ranges. Companies below $300 million are considered micro caps. So is a small cap the same as a penny stock? Not necessarily. Penny stocks generally trade for less than $5 a share and are often found on the over-the-counter or OTC market. They're also very high risk. However, a small cap can be a penny stock. For example, let's say company ABC has 100 million shares outstanding and a stock price of $4.50. While the stock price makes ABC a penny stock at $450 million, the market cap makes ABC a small cap. ABC is both a penny stock and a small cap. So here are 3 examples of small cap stocks along with their market cap. Southwestern Energy Company, or SWN, is $839 million. California Resources Corp., or CRC, $345 million, and the Cayman Group, or KAMN, $1.7 billion. The stock price of SWN is $1.53, making it a penny stock as well. So here are the performance things, just some things to think about when it comes to small cap stocks. Small cap companies are more nimble compared to mid and large cap companies. So during a recovery, small caps tend to perform the best as they lead the pack. This is mainly because of their ability to move quickly. While larger companies issue bonds to raise capital, small caps sell shares of stock to fuel their growth. In the process, small caps must give up equity. In contrast, larger companies are able to issue bonds, for example, debt, because of their maturity and good credit ratings. And we have an awesome fancy chart that you can look at. I love it. It's a line graph. You can see it. It shows the performance of 2 small cap indexes compared to the S&P 500. Really fascinating stuff. You can see it at thecollegeinvestor.com. So, small cap stocks can be very volatile. Many larger institutions such as endowments, pensions, and hedge funds don't invest in them as much as mid and large cap stocks. This means the players in small caps are also smaller, leading to less stock price stability in the group. Small caps can experience run-ups in their stock prices only to collapse quickly. There's also the issue of analysts' coverage. Large cap names like Microsoft, Apple, Amazon, they're covered broadly by analysts, but there isn't as much coverage on SWN, CRC, and KAMN. Now, which means you'll need to do additional research yourself. Now, this can be time-consuming, but good research can pay off. Figuring out which companies have good management, strong financials, and the potential for growth, that's worth knowing, versus just grabbing a handful of small caps and hoping for the best. So here are a few tips. There's a few ways to do this, to invest in small caps. These include buying shares in funds, ETFs, and stocks. Some funds and ETFs mimic small cap indexes, such as the S&P 600 or Russell 2000. Buying these index proxies means 100% exposure to small caps. That might not be bad if your portfolio has other diversified holdings. The iShares Core S&P Small Cap ETF, IJR, follows the S&P 600 index. The iShares Russell 2000 index, or IWM, follows the Russell 2000 index. Some small cap funds target specific sectors. The Invesco S&P Small Cap Energy ETF, PSCE, is one example of this. It is a market cap weighted index of small cap energy stocks. Other ETFs may follow emerging markets or junior gold miners small caps. There are also funds and ETFs that have limited exposure to small caps. These funds may contain a small percentage of small caps and a diversification of other sectors and market caps. So this mix allows for some exposure to small caps while also trying to keep volatility within the fund low. Finally, you can buy shares of individual small companies too. This might be riskier compared to what we just discussed since you have exposure to a single company rather than several of them. It also means you'll need to do the research to vet each company for quality. Investing in small cap stocks can be very rewarding. It's a chance to discover the next Microsoft, Apple, or Google. Think about that. Learning about fundamental and technical analysis can help you reveal if a particular small cap has great growth potential or not. That's it for today. Wow, that was a lot to cover in such a short amount of time. So if you have some questions about this, we got you hooked up at thecollegeinvestor.com. Tons of resources, tons of ideas on how to do this and strategies. You can find it there. So much fun talking to you today. Have a wonderful rest of your day. We'll talk to you again soon.